Hello and welcome to KYC. You're watching NDTV Profit and I'm Sharad Dubey. And today's company, which will be on our radar, that would be a software company. It's called Newgen Software. Recently, the company came out with its results also. But what the question remains is, why are we actually interested in this company? What I actually want to know. What are the questions, which we have gathered from the investors and our viewers? We are putting them across the management. First question is, what is the outlook for the deal closures, especially in the emerging market industries? That will be something which you'll be watching out for. The second question, of course, will be whether it's the tense fight between the local or the global competition, how it is shaping up, and what would be the company's strategy going ahead. Also, interestingly, the third question where the market is interested is, what is the margin outlook planned for FY26? Already half of this time is completed, and how do one sees AI helping with the internal productivity? And of course, when AI kicks in, margin benefits also kick in. That's what most of the IT players have stated. Last question is, any acquisitions are planned in the AI space? That's very interesting, as most of the IT companies in the large service-based companies, they are announcing some JVs and tie-ups, but no major AI investment yet. So we'll be also looking at this entire gamut. But the question remains is, what are the total factors going ahead for this company? But before that, I would like to just point out what are the details about this company, what is all about. So it was founded in 1992. The company was a public company focusing on process automation and content management. To simplify it for our viewers, this is not service-based IT company, this is product-based company. That will actually simplify it. It's New Delhi based, but the global process that has actually picked up. It's present in 77 countries, having roughly 500 odd customers. And interestingly, the company develops software for digital transformation and automation. Of course, in some IT viewers will know this is agile method as well. BPM, ECM, these are the segments. That means they develop enterprise solutions as well. And to simplify it, they have a good scale as well. FY25, the revenue stood at roughly 1,500 odd crore rupees. So we can say that this is a proper mid-cap IT company. Tech advantage, low code, no code platforms. These are the buzzwords. And of course, now let's add the third buzzword, that's the AI as well. The primary product is about integration, and this is largely used by enterprises. So that is what we are actually looking at. But there are other products also which are very interesting. To name a few, they offer workflow automation, document management, customer communication, and interestingly, BFSI, government health sector. These are the three sectors where the majority of the clients are there. Revenue models, if we have a look, we are having software sales, services, and supports, and the revenue mix, it is a total mix over here. Just see, it's not concentrated on any segment, and that is actually a positive thing for the company as well. Geographically, we see there has been a lesser dependence coming in. Of course, in the you could say in the US markets, that's only just 24%. So that is also a hedge in today's times as well. But let's go back to our show's format. That is the rating parameters. We are having 8 parameters and we'll be judging them on that. Let's just go through the parameters once before we start the show. Income statement, balance sheet, cash flow, return ratios. These are all numbers, but apart from that, non-numbers, shareholding, street kid, valuation, and lastly, street coverage. That is also something which we'll be watching out for. But let's start with the first parameter today, and that is the income statement. And of course, we'll be adding the numbers as well, the Q2 numbers. Q2 numbers, of course, came in, we could say, a last previous trading session, and stock saw a significant up move as well. But income statement overall, the revenue, that stands in at a 24% 3-year CAGR. We have taken the financial years, FY23, FY24, and 25 to derive at this number. EBIT the growth also has been roughly at 25%. Now, the number which is coming on the screen is the margins numbers, 21% growth, 23%. So there is an uptick coming in the margins as well. Let's just deep dive into this margin trajectory, and that has been a symbol of strength in current market scenario, and that is something which will of course pick the brains of the management also, that despite so much uncertainty happening in terms of deals, they have been able to increase their margins, not very significantly, but still tick by tick it's on the upside as well. And the main question is, how were the Q2 numbers? And the numbers were bumper. You could say that one side from the mid-cap IT space, Newgen Software is coming out with good numbers, but the large big tech IT companies, still some or the other overhang is still there. But let's look at the numbers. EBIT has seen a significant jump, almost 162% up on a sequential basis. Revenue also seeing a 25% odd growth. And I had spoken to you earlier that the company has a geographical diversification, and just 24-27% of revenue just comes from US market, and that is why you are seeing the benefits of diversification for this IT/product company. Now, net profit also saw a significant jump. That's roughly 64% up, and in a muted scenario, still the company has outperformed in the IT space, especially in the beginning of this earnings season when you compare them in the mid-cap and the small-cap IT and product companies. So their peer levels will be also different. Net, the income statement from my side is going to be a thumbs up. I would give a +1 rating for the income statement parameter. Balance sheet, also largely a clean balance sheet to look at, and generally when we look at these IT companies, we should always look at their cash levels also. The question remains for the investors is whether this cash will go as a buyback, whether this will be used for growth or acquisition. That is something the street will be watching out for. And company had mentioned about AI acquisitions as well. So of course they're sitting on a good pile of 416 crores of cash. So whether this will be a buyback or an AI investment, that is something which the street really wants to know. But net, if looking at the numbers, they are decent, and that is why I have given a +1 to this as well. So the company is ticking the right boxes, income statement as well as balance sheet, but cash flow there seems to be a neutral move. Of course, the cash flow to PAT conversion, that has actually come down, but the operating cash flow, that has been growing significantly. That's on the positive side. PAT is also doing well, but some net cash flows adjustments have also taken place. And when you look at operating cash flows, you should also look at the other cash flows as well, which includes financing and other cash flows, and these impact is coming in the negative side. That net cash flow income you can see on the screen, that's down 21 odd crore rupees. So because of these adjustments, I would give a neutral rating when it comes to the cash flow parameter. So we have spoken about 3 parameters till now. It's going on the positive side for the company, but let's see whether this can hold or not. But return ratio, that is where some questions are arising. Let's just pull up the return ratios chart, and they have been there, they have grown, but it's like a kind of stagnation, and you could say that it's in a very thin band. Whether this business actually maintains this, or there is a upside or a downside, that we'll ask the management. But the ROC numbers, not much to discuss. They are still flattish, not a major growth coming in. So that is area where of concern comes in for me. And for return on equity, that also, if you look at it, that's stable at 23 odd percent. No major changes happened. Because of that, I would be giving this a thumbs down when it comes to the return ratio for Newgen Software. But let's move on to the shareholding segment. That's also pretty interesting, and we have compared the shareholding patterns over the last 3 years, and you've seen the promoters have stood by. Not much sell has happened. Of course, in March 24, the stake was 55%. Then after that, a small stake sale has been there. Promoters have held the majority stake in the company. Now let's go deeper into it. The FI segment. The FI segment, out here we have seen some kind of volatility in the counters. It was around 16 odd percent. Then there was a big massive jump in March, but then there was some profit booking, some selling which has happened, and roughly you could say 18 odd percent is the current stake. DIs, they have been lapping up. That's pretty interesting. Just compare that with March 25 with September 25. So we could say, or we can deduce that smart money has come in ahead of the strong performances which we saw in the second quarter of this fiscal as well. Public, that has actually gone up as well, as the retail interest has also been made in the stock, and that's a kind of a anomaly because the IT space has been hated a lot. The Nifty IT index has cracked more than 15% this year. But if you go deep inside, you look at the product companies, there are some good performances happening, diversifications are there, and company has held its ground. That's why the retail interest has been maintained. That's roughly, you could say, almost, it's jumping from 16 to 18 odd percent. But of course, I would definitely give a thumbs down to this. And of course, this reason for that is coming in is that there hasn't been a significant increase in the DI participation. So it should have been on a higher side. Then we could have concluded a neutral or a positive rating. But for now, it's a down thumbs up for the shareholding patterns. The 6th parameter, which I'll be judging the company on, that's the street cred. The initial up move which you are seeing 1 month share performance, this has largely been aided by last 2 days rally after the numbers have come in. So that is why that's coming almost 13 odd %. But if you're a long-term investor in the stock, it has tested the patience of the investors. 6 months, 3.5% odd return. And looking at the year to date, that's a significant downtick coming in. So if you are a long-term shareholder in the stock, your patience is getting tested. And maybe we could say that overall, this year itself, nothing has much happened for the stock. But 5 years, if you're holding it, it has been a significant multi-bagger. 663% odd returns have come in. So net, long-term investors, they have made money. Maybe positional investors, or you could say 8-month to 12-month holding investors, they have lost money. So I would like to give a neutral rating, but overall the technical charts, the earnings, what they are suggesting, this might suggest an up move going ahead. So that's a very interesting portion to look at. Up next is the valuation segment. That's one of the interesting portions of this company, and because of these corrections, the valuations have become attractive. EPS numbers, they have actually gone up. That's around 24 in FY26 expectations, and you're going to touch the 30 mark in FY27. The P ratio, we have taken the competitors' average also. It's, you could say, roughly fairly priced, but it is for 41 times for FY26 and only 34 times coming in for the next 12 months after that fiscal year. That net it means is that the valuations are decent, fairly priced in, but there is a scope for growth here as well. Of course, the large cap IT companies, if you have a valuation check, they range between 20 to 25. The smaller ones, they range between 30 to 40. So it's bang on towards the lower end of the fairly valued IT product companies in the mid cap or the small cap companies. So net valuations, I would be giving this company a thumbs up. And street coverage at last, you see there's only 8 analysts are actually tracking the stock. Average upside potential still, it's 19% over here. But hold and sell, that is having the majority of them. That is why I'll give a down thumbs up. So let's revise all the entire rating parameters which we have got, and one by one we'll give in the overall numbers. Income statement, balance sheet, they have done positively well. I've given 1+1. This is a neutral here, cash flow. And return ratios, still not much happening, so a thumbs down coming in. Shareholding, not much to share. Street cred, 1 year return shareholders, they haven't got much. Valuations, still attractive in the current levels according to their peers. And lastly, street coverage, not much coverage, but not much bullishness either. And they're expecting a 19% upside potential. Even Stevens, 4 to 8. We are getting these numbers. Newgen Software, the final rating for KYC comes in at 4 out of 8. But let's move on and let's pick the brains of our guest. Good afternoon, Virender Jeet. He's the CEO at Newgen Software. A very interesting set of Q2 numbers had actually come in. And of course, my first question, of course, would be that what led to this growth in the Q2 numbers, and will this growth actually sustain going ahead?
Good morning, Sharad. How are you doing? And thank you for having me on your call. I think, when we look at these Q2 numbers, I think we are looking at in the context of probably Q1. And I think Q1 number was an anomaly in our system. Generally, we have a history of growing at a consistently a better rate. And because of a lot of uncertainties and various conditions, I think Q1 was muted. Q2, we have come back to the normal growth trajectory. No, I would not still call it fully because some markets have fired while some markets have not. I think markets outside India and Middle East, which are our stronger markets, have fired, which has got us to around 11% of overall growth. But I'm thinking, as our traditional markets, which is India, Middle East, also start joining this growth momentum, we should be in future able to do better. So this is predominantly on account of deal momentum. We are a software product license-based businesses. Typically, it's a very sales and marketing driven businesses. And we have to make new deals. A lot of our business comes from new license sales in that quarter, as well as new logo acquisitions. And that has helped us to grow in this Q2. And I think, we can continue that growth momentum going forward.
Mr. Jeet, one more question. Regarding the deal closures outlook in the emerging markets, of course, Q2 numbers were on the stronger side as well from these emerging markets, and they also contributed a decent amount of revenues as well. How's the outlook looking like for deal closures? And I want to know about the large size deal closures. Are they happening, or are there delays are still there, as what the industry folks had spoken to me about?
Yeah, so our large size is quite different than their large size, but I think the problem remains the same. We have seen generally in the markets when the deals are slightly larger size, the decision-making processes have been a bit slowed down. For the first half of the year, we still have faced that as a problem. I think even in Q2, some of the funnel deals which were of larger size did not make through in terms of they are getting deferred or delayed or staggered to different quarters. So, in my own take, I think that over Q3, Q4, the situation should become better. I think both in US and mature markets as well as in India, I think the banking and credit offtakes are for revival. We have a lot of our sales coming in areas which we support digital lending platforms, both in NBFCs and banks. And with the credit revival, I think there's going to be renewed interest in getting and automating those solutions. Last 2 years, 3 years, we had a wave of automating the public sector banks. I think now the private banks are joining in terms of modernizing their systems based on digital stack. I think both in US as well as in India, I think the banking revival can happen downstream. But I think we'll have to wait and watch because there are a lot of uncertainties happening across every day in terms of what's happening on trade regulations, also in terms of spend and uncertainties, which also in a market like India, which AI creates in terms of because we are typically end consumers of AI rather than really being at the forefront of the technology.
Well, I will hold that thought on the AI front, but I have another query as well. And I've been checking a lot of PSU banks, their advertising, their investor presentations, and the significant budget is being earmarked for digital stacks or AI or the modernization. And they're actually picking up more faster and they're absorbing than the large private banks as well. That's what I've been hearing from the industry. But so this benefits you a lot because roughly I'm seeing 68% of your revenue comes from the banking and the financial services part. So is there any new specific product you guys are working on, or there is some new offerings coming, especially for the Indian BFSI clients, and what would be your pitch for that?
See, I think the maturity of the digital stacks in Indian banks is already quite advanced compared to even when we are looking at global peers. But what is also the India is a big growth market, and the innovations is happening at different layers, whether it's coming from digital stacks which the government is providing or the overall the technology emerging. So every 3 years, the stacks do get transformed. So the opportunity in India is very large. See, we have been on the forefront of typically using the India stack as well as looking at the DLP programs and modernizing the whole DLP programs end to end in public sector, and we did a lot of those. We are also working on the trade size and trade automation. That's another area. There is also an area of payments which we're working on. So a lot of products on the line which can solve and help our customers to solve their next generation problems. So the stack out there is quite relevant. Beyond that, there is a renewed because of the interest in AI and what the Gen AI has led. There's a renewed use cases around service request management, compliances, records management, governance, where we are very strong globally in terms of we have the one of the world's best recognized products in those stacks. So I think that should give us momentum over some time. But I think we'll have to wait and watch where the overall situation how it unfolds.
That's pretty interesting. And I saw the cash balance also of yours. If you could fire the cash balance, that has been on the higher side. As an investor or as a public, our investors who are watching our show, KYC, they tend to ask, will there be a kind of a shareholder return, a buyback in the offing, or are you looking at some investments in R&D or AI? So the street is very confused now. If IT company is having cash on their balance sheet, two school of thoughts have come up. So which school of thought do you support?
So I think one of the things is, one of our challenges right from the way we got listed is understanding our company, being because there are very few product players out of India which are going and selling globally. So product companies generally are very investment-led companies. And for us, I think the whole objective of running is the business has a lot of margins and there's an opportunity to really get those returns. But our interest is to invest in growth. Now, for investing in growth, we have been lucky to generate a lot of profits over last multiple years, and the cash has got accumulated. And we have given the guidance that most of the whole purpose of that cash is to make sure that we are able to aggressively invest for the growth. We are looking both organic ways of expanding markets where the cash can be deployed, as well as inorganic ways in new areas of technology, which could be around AI or also other than AI. There are many areas which are aligned to our products. We are interested in that. So far, I think this is the direction which the board has provided us to look at the money and invest in growth. And if there's any other change in, then we'll come back and inform everybody about it.
And Virender sir, AI is the buzzword. Some years ago, SaaS was also there, Web3 had come in. But net, for a global consumer, what is the competition like? Currently in India, you have a good stronghold in the BFSI space that's largely known in the markets. But globally, how do you position yourself that you are offering AI related products and how unique your product is as compared to the global products?
Yeah, so I think for product companies, we have to be slightly ahead of the curve. Our investments in AI started around 3 years back. So, I would not be able to sell my product globally if I was not at the top edge or the cutting edge of technology or what the AI is supposed to deliver in my product space. So I think we have done that hard work, and I think the work and invest will keep on happening over us because the area is evolving very fast. We also were leaders in getting the Gen AI integrated in our product stacks, both in, I think Marvin was the first release, then we had other products which were released last 2 years. We were also got early wins across different geos which of AI use cases. So I'm very comfortable in terms of where what we have done in the products. Having said that, the opportunity of future is very, very large. It would need more investments, both in people, talent, and building technology. Today, when my products are compete and benchmark against the world, we are not, shying away from, competing with the best and, winning those use cases. And that's what we are doing. If you're looking at what we service is the top enterprises in the world, they only buy the best products. They don't make compromises on those. So, and if you look at my deal velocity, even in last 2 quarters, we have had significantly beyond existing accounts. We had deal wins in new logos where everybody is a level playing field and I am competing against the global competition. So we are, pretty happy about progress, what we have done for, but also we are conscious about the opportunity which the AI will unfold over, next few years and how to really invest for that. That's our plan.
Well, that's pretty interesting for AI investments. And when we speak about growth capital, you'll be actually doing from internal accruals. That's what you had earlier stated. But current margins, not much move has happened. It's currently at 23 odd %. Okay, it's in a good range. It's a positive side, but not bigger move. What's the margin outlook for FY26 going ahead? Will we see because of expansions, the margins might be suppressed? Or are there any products which are value added, which might actually bump up the margins going ahead? And maybe even you are an AI company, you will be using AI to yourself also. So maybe an incremental benefit to the margins comes. So the street wants to know what's the margin outlook for FY26.
I think last 4 5 years, with whatever growth perspective, we have said that we have an aspiration of maintaining the net margins around 20%. And rest, everything has to be aggressively pushed back into R&D and growth and expansion. The opportunity size for our kind of a company who are typically play in the product is very, very wide. It's our own ability to execute and invest rightly to make sure that we are able to capture. If you understand our business a bit deeply, you see that almost 65% of my revenue comes from the heads which have no direct costs associated with that. So any expansion of license, annual technical support or subscription, or the cloud or SaaS businesses, they don't have direct costs associated with that. So we have organically with even mid-teen growth, we always expand margins. But then again, for us, the whole idea is to invest back that into either in R&D or in sales and marketing to make sure that we are safe. So I think our first priority is growth, and the second is margin. Having said that, we think that as the business grows, it is very organic. The margins will keep on expanding.
Well,
So
yes. So the first priority is growth, second is margins, and
sure.
AI will be wrapping this everything all around, as the entire conversation also was nearly AI as well. Thank you very much, Virender sir, for joining us and speaking about your company in our special show KYC. But that's all, folks, today. And thanks for tuning in for KYC only on NDTV Profit.